Risk management is proactive, not reactive. Okay, you can see it in the title. All right, it's getting very dark. Time to learn to manage risk. Uh, I was looking back, and these are some of the headlines. People who might be seeing this and say, "Oh, okay, I don't know what he does." After the paywall on Substack. Uh, you know, you've seen the headlines, but if we go in kind of reverse chronological order here, I started talking in October about managing a manipulated market. That's what I was just talking about. Algorithms, index funds, too much money chasing the same index. It's what they call the passive flow or the passive bid under the market. And at some point it's going to break. And when it does, then all heck breaks loose. So I kind of started a few months ago by really calling attention to this and then said, hey, for now, enjoy it. Okay. Imminent danger, I never know, but a good chance it wasn't. And sure enough, we kind of waffled around for a while. Moved on to, hey, the stock market says sending a few warning signs out in November. Okay, that's this on the S&P. Bonds didn't do a whole lot. It's all one market now. That's what I was just talking about. It all moves in sync. It makes stock picking so difficult on a sustainable basis. Trading stocks, different story. Investing in stocks to buy and hold, I think we're going to need a wholesale market-wide washout first, a la 2008 or dot-com bubble, uh, in order to really get back to that. Uh, that's why I'm trying to keep everything simple. I did think that the S&P was getting to this decision point. We started the year okay, and now it's kind of turned into mud, and maybe the mud is getting a little bit deeper. Like I said here in early February, well, I don't trust this market one damn bit. Uh, then a couple weeks ago, now at risk of declining faster. I pointed to that in the charts. This is all the stuff that goes behind the paywall, obviously. But I'm catching everybody up quickly because even if you did read every word I've written since October, you still, this, I think the headlines help us put it all together very quickly. And let's face it, everybody's in short attention span theory these days, right? So, here was last week. Three steps to a market crash. We're in step two. As I write further down this week, I think we're in like step two and a third. We're not at step three yet, but we're getting pretty darn close.